Kim, good to see you as always. Today we are talking about 3 RMD strategies to reduce your tax burden. I know you're always thinking of strategies to help your clients reduce their taxes. So let's talk about RMDs because proper planning is vitally important. Let's start at the top though. What are RMDs and how are they calculated?
So an RMD is a required minimum distribution. So all this money that you've put in these pre-tax retirement accounts, IRAs, 401ks, things of that nature, the government mandates that once you hit age 72, you have to start taking that money out because they've never gotten the taxation on that before. So what they do is that they take the account value as of December 31st, the year prior, divide it by your life expectancy, and that is your RMD amount. Now, naturally, the older you get, the shorter your life expectancy is. So the more that you have to take out of those accounts each and every year.
Okay. So I know that you work really hard to make sure your clients take those distributions when they need to, because if you miss it, there is a significant penalty.
Yes. So whether or not you need the money and want to take it out, you have to take it out because they're going to penalize you 50% for any of the
50.
funds that you should have taken out of those accounts if you don't take it.
Unbelievable. That would hurt. So now let's run through 3 strategies to reduce the tax burden that comes with RMDs. And first on your list of considerations, consider taking those distributions as early as possible.
Right. So just because you have to start taking out at 72 doesn't mean you can't start taking out earlier. So one strategy could be to integrate that IRA as part of your income need in retirement, and you can start taking funds out as early as age 59 and a half. So that would be one strategy, is to start to take those funds out sooner than later.
Okay. And a next strategy here that we're talking about, Roth conversions. This is something that Brent and you and I have talked about at length before. In fact, we have a separate breakout video on it.
Right. We do this a lot for our clients. So for some of those people out there, they've done too good of a job of saving for retirement. So they have more money built up in those accounts than what they're actually going to need, again, when they're forced to take it out. So a lot of times in those situations, what we'll do is we'll recommend Roth conversions, which is taking money directly from those IRAs accounts, biting the bullet, paying Uncle Sam on that money, and then putting it directly into a tax-free Roth IRA. And that allows that money to then grow tax-free going forward. And it also reduces down that future RMD requirement by doing that strategy.
Okay. And last on our list of considerations, again, something that we've done a separate video on, qualified charitable distributions. How does that affect me with my RMDs?
Yes. So for those that are charitable minded, if you're already giving to charity, this is a great strategy because what you can do is once you get to that RMD age, you're allowed to take money directly from those IRAs, give it directly to charity. Don't let it touch your hands first. When you give it directly to the charity, that is when you're able to forego taxation on that money. And that's called a QCD, a qualified charitable distribution. So it can be a great strategy for those RMDs.
And again, this all just comes back to strategic tax planning because those RMDs are income. A lot of us think we're going to be in a lower tax bracket when we retire, but that's just not always the case.
Yeah, that's not necessarily true. You need to have a strategy before you ever get to that point, especially because some people are just going to be in the same tax bracket in retirement as they are currently. And what we do know is that if nothing is done in 2026, tax rates are going to increase. So even if you're in the same level of income now as that you're going to be in retirement, you can almost guarantee that you're going to pay more tax at that point in time if nothing is done. So planning should be often done now before you ever get there.
Absolutely. That phone call, the earlier the better, I'm sure. So, Kim, if somebody wanted to talk to you about implementing any of these strategies, what's the best way to reach you?
Best way to reach us is just to go to our website. It's got all of our contact information on there, www.young-wm.com. It'll have our phone numbers. You can fill out a form right on the website, email address, anything you need, you can go right there to get it.
Perfect. All right, Kim, thank you.
Thanks.